Assalamualaikum. We from Group 12 would like to present a report on the company JCB Berhad. Among the things that will be discussed is introduction, accounting standard and policy, disclosure of non-current asset, economic environment and asset valuation, analytical and engaging presentation, and
introduction of JCB Next Berhad. The company, dynamic and innovative company that operates at the intersection of technology and business. JCB Next Berhad carve out a niche that aligns with the demand of the market, take the lead in market position because of its agility, adaptability and understanding of emerging trends. JCB Next Berhad operational segment. First, to addressing the diverse needs of clients with high quality solution. Second, ensure resilience in the industry, establish itself as a versatile partner. Lastly, is a beacon of innovation and adaptability in its industry with strategic market position and multi-phase operational segment. MFRS 116 is property, plant and equipment. The definition is a tangible assets that are held for use in the production or supply of goods or services, for rental to others, for administrative purpose and are expected to be used during more than one period. Recognition and measurement. Company measure at cost model, which is cost minus accumulated depreciation and impairment loss. The cost was include expense related to asset acquisition, maintenance and site restoration. For self-constructed assets, it will include cost of material and direct labor. Company was purchased software for equipment functionality. Significant parts of property and equipment have different useful life, accounted as separated items. To determine profit or loss from disposal, company will compare disposal proceed with carrying amount. Then, the result will recognize in operating income and others operating expense in profit or loss statement. For subsequent costs, replacement costs are recognized in carrying amount if future economic benefit are probable and costs can be reliably measured. Replacement component carrying amount is deducted to profit or loss, and daily service cost recognized in profit or loss as incurred. Lastly is depreciation. Depreciation occurs annually due to component lifespan difference, and company use straight line method, which is cost of assets minus residual value and recognize profit or loss statement.
MFRS 15. The company using MFRS 15 on annual report, which is MFRS 15, revenue from contract with customer. The principle of MFRS 15 is revenue is recognized when the goods or service is transferred to the customer. The performance obligation involved in this company, which is online advertising and contract staffing. Total revenue is allocated to the separate performance obligation. Online advertising is recognized at a point in time upon advertisement are placed in the website. The company has an average credit term of 90 days. Meanwhile, contract staffing relates to revenue from providing contract staff to customer. The revenue is recognized over the period when the service is rendered. The group has an average credit term of 30 days.
MFRS 138. It is an asset that is valuable to a person, business or other entity but does not have an inanimate existence or financial worth. As stated in JCB Next Berhad 2022 annual report, the business apply MFRS 138, which is the standard that applies to intangible asset. Accounting standards such as Generally Accepted Accounting Principle GAAP or International Financial Reporting Standard IFRS usually regulate the identification and evaluation of intangible asset. In line with IFRS, which covers intangible asset with MFRS 138. First point is recognition and measurement. First, marketing right. Marketing right acquired by the group are valued at cost less any cumulative amortization and cumulative impairment losses. This right have a finite useful life. Second is subsequent spending. Subsequent spending should only be made if it enhances the potential financial gains associated with the particular asset in question. Third is amortization. Intangible assets that have perpetual useful life are not amortized. Instead, they are assessed for impairment every year and whenever there is a reason to believe they might be. The cost of an asset less its residual value is the basis for amortization. Over the estimated useful life of the intangible asset, amortization is recognized in profit or loss on a straight line basis. Next point is subsequent costs. First, separately acquired intangible asset. Subsequent expenses are usually expensed after the initial recognition. Second is internally generated intangible asset. Only expenses that satisfy certain requirements are capitalized after initial recognition. Third is development and research expenses. Research expenses are deducted as they are incurred only when certain requirements are satisfied, as time that an asset is likely to produce future financial benefits are developed, costs capitalized.
Next, let's move to the next standard, which is MFRS 140 for investment property.
Investment property is held to generate capital appreciation or earn rental income or both. First, recognition and measurement. JCB Nets Berhad measure the investment property initially at cost, which is the transaction cost should be included in the initial measurement. For the example, the self-contracted investment property, the company capitalized all costs that related specifically to the construction, such as cost of material and direct labor. Next, measurement after initial recognition. JCB Nets Berhad measure the asset of investment property at fair value model. The gain or loss arising from changes in the fair value of the asset recognized in profit or loss for the period in which it arises. JCB Nets Berhad also chose cost model where the fair value of the investment property under construction is not reliably until its fair value become reliably or construction is completed. When the company derecognize the investment property, either when it is sold or when it is finally withdrawn from use and no future economic benefit. The gains or losses arising from the disposal of the asset, which is the differences between the net sale proceeds and the carrying amount of investment property, recognized in profit or loss in the period of the disposal. In addition, JCB Nets Berhad have been transferred the owner-occupied property to investment property that will be carried at fair value, so that the company should be applied MFRS 116 for owner-occupied property and treat any differences between carrying amount of the asset and fair value in accordance with MFRS 116. The increase in value shall be recognized as gain in comprehensive income and retained in revaluation reserve. The offset exception in MFRS 116 also applied, which is the increase and impairment loss should recognize in profit or loss. Finally, the revaluation of the investment property that the company provides is every 12 months.
MFRS 137 Provision Contingent Liabilities and Contingent Asset. Provision of funds are set aside for specific probable future expense or other financial impact such as loss in value. To consider it as a provision, it must be an arrangement or preparation beforehand as for the doing of something of the meeting of needs. A provision is recorded when there are confirmed obligations from the past event. It can be reliable estimate and it's likely that there will be a future economic loss to fulfill this obligation. To calculate the provision, JCB Nets Berhad consider future cash value, adjusting it for time and risk. The interest cost related to the provision is recognized over time as a financial cost. For contingent liabilities, company policy use if there is a situation where it's unlikely or too hard to predict how much money might be needed in the future. They do not show it as a debt on their financial statement. Instead, JCB Nets Berhad mention it as a possible future obligation unless it is highly unlikely to happen. For contingent asset, JCB Nets Berhad expect to get some money or gain benefit from something that happened in the past but is not sure yet, depending on the future events, and at the same time do not officially count it as an asset on a financial statement. JCB Nets Berhad only mention it as a possible for economic benefit, but it is almost contained that they include it as an asset.
Disclosure of non-current asset. Property, plant and equipment. Items that are included in the property, plant and equipment are computers, office equipment, renovations, and furniture and fittings. Total of property, plant and equipment for the year 2022 is RM1,014,742. The company disclosed their asset using fair value measurement. The company revalue the asset once a year and revalue using straight line method based. Investment properties. The items that are included in investment properties are freehold land and buildings. The total of investment properties for the year 2022 is RM8,388,000. The company using fair value measurement to disclose their investment properties. The company revalue its investment property every 12 months and the value it will recognize is measured using cost model. Intangible asset. The item that are included in intangible asset is goodwill. The total of intangible asset for 2022 is RM50,212,990. The company using fair value measurement to disclose intangible asset. JCB Nets Berhad revalue their intangible asset once a year and revalue using straight line.
Next, the analytical and engaging presentation. Here, the graph above show the non-current asset that we kept in financial position 2021 and 2022. The graph show the total non-current asset increased from 270,260,587 to 253,693,403. Property and equipment increased from 64,593 in 2021 to 53,968 in 2022. Total investment property remained constant at 80,388,000. After that, the subsidiaries investment increased from 36,259,123 in 2021 to 103,311,035 in 2022. Investment in associated companies decreased from 82,685,068 to 79,652,499. And the last one is other investment that increased from 49,071,040 to 52,287,901, a decrease of 3,216,887 ringgit.
For criteria, we have two criteria. The first one, cost can be reliably measured. The asset have a probability of future economic benefit. The asset should be expected to generate future economic benefit for the entity to gain more profit in business. Secondly, reliable measurement. The cost of the asset can be measured reliably, including the initial cost and any subsequent cost for improving or maintaining the asset. Methodologies, we have three models. First is cost model. The non-current assets are carried at their historical cost less accumulated depreciation and any impairment loss. This is a common model for most non-current assets. Second, revaluation model. This model may choose to revalue certain non-current assets. Last, impairment. If there is an indication that the carrying amount of the asset may not be recoverable, impairment testing is performed and the asset is written off to its recoverable amount if necessary.
Now let's discuss about economic environment and assets valuation. The key of non-current assets owned by JCB Next Berhad. The main non-current assets is investment in subsidiaries. How? 36,259,123 ringgit is invest in JCB Next Pte Ltd over the fiscal year. Subscription for 11,261,271 fully paid ordinary share at RM3.22 per share. The purpose to control of subsidiaries and structural entities through common share and incorporation of financial statement in consolidate financial statement from control commencement to termination. Potential controlling right considered only when relevant, and the goal is control entities exposed to variable returns.
Factors that affect the economic environment of JCB Next Berhad: the economic disruption caused by the epidemic, fiscal and monetary stimulus, and the effect the market price contributed to the worldwide inflation rise. The performance of subsidiaries can be impacted by the general status of the global economy, which includes elements like interest rate, global stock market, labor cost and availability, logistics and transportation in JCB Next Berhad, and so on. This is particularly true if JCB Next Berhad conduct business in multiple nations. Interest rate changes, which are determined by central banks, can have an impact on subsidiary profitability as well as the cost of borrowing. An increase in interest rate could result in higher borrowing costs, which would affect subsidiaries' financial performance. There was volatility on the global stock markets, with reduction ascribed to poor macroeconomic events, rising inflation, and geopolitical tension. Impact of the global pandemic for JCB Next Berhad is despite the article's suggestion that the fight against COVID-19 has reached a turning point. The pandemic's after effects were felt in a few weeks, such as altered consumer behavior, border restriction, and economic reaction, labor cost and availability, as well as the possibility gradually lose in its competitive edge because of things like a more educated populace shifting away from labor-intensive jobs. This has an impact on JCB Next Berhad overall production costs. Labor availability and cost can have an impact on a subsidiary operating costs. Tight labor market could result in higher compensation costs, which would hurt JCB Next Berhad profitability. Logistics and transportation were impacted of the difficulties in obtaining goods during the COVID-19 pandemic and the subsequent drop in shipping costs as demand declined. The demand for transport services may be impacted by shift in the dynamic of JCB Next Berhad trade. Changes in the economy policies may have an impact on subsidiaries that are exposed.
Next, we will discuss about the financial ratio analysis that related to non-current assets. There are three types of financial ratio that I have analyzed. First, return on asset. The return on asset shows the percentage on how profitable a company's assets in generating the income. The formula to get return on asset is net income divided with average total asset. In the JCB Next Berhad, net income is as much as 19,205,199, and the average total asset is 307,211,664, and get 6% for return asset. It shows the company is earning 6 cents for every ringgit of total asset it possesses. This is a measure on how the company can generate earning relative to the size of its asset base. After that, asset turnover ratio. Asset turnover ratio can be used as an indicator of the efficient which a company is using its asset to generate revenue. We need to divide revenue with average total asset. The revenue that company earned in 2022 was 18,238,575 and 307,211,664 for the average total asset. This ratio shows an asset turnover ratio 6 cents means that on average the company is generating 6 cents in revenue for every ringgit of asset. This suggests a moderate level efficiency in using asset to generate sale. And the last one is the fixed asset turnover. The fixed asset turnover ratio measures how efficient a company utilizes its fixed asset to generate the sale. In the GCB Next Berhad, the revenue is 18,238,575 and the average fixed asset is 237,566,866. It shows a fixed asset turnover ratio of 6 cents means that every ringgit invested in fixed asset, the company is generating 6 cents in net sale. The company is not very efficient utilizing its fixed asset to generate sale.